We're pleased to be joined on Trading Nation by Professor Jeremy Siegel of the Wharton School of Finance. Professor, the good thing about math, you don't need to be a PhD in whatever to understand that the law of large numbers works, is as you get bigger, the percentages get easier. In other words, we're only 2.5% away from Dow 24,000. Do you think we're going to get there before the end of the year?
Yeah, I do. I think we're going to get to 24,000. I think the next 1,000 is going to be a little tougher to 25. We have a lot of gains that I think will be digested. We're going to see the tax cut. That's going to be very important. We're going to see the Fed choice, where the employment report is Friday and the Fed meeting is Wednesday. Wow, I have almost never seen a week with these many earth-shattering economic events as we have this week.
Yeah, you know, I actually wrote, I think it was Sunday night, I wrote on my Facebook page, I said basically it's going to be probably the biggest and most important week of the year. Tomorrow, Wednesday, the CNBC Super Bowl, effectively the Fed decision and the tax reform plan. But let's focus on the Fed. Jerome, he goes by Jay Powell is considered the front runner, widely in the lead in the betting markets. For some reason, if the president on Thursday does not nominate Powell, does that take out the stock market rally? Does it slow it, stop it?
Well, of course, it depends on who he picks. It would be a shock. You're absolutely right. The betting market is like 7-1 for Jerome Powell. And so they're getting used to that idea, and I think they're fine with that idea. I think they'd be fine with Janet Yellen. I think John Taylor would be a little bit of a shock. Having been advocate of higher interest rates, I think he's a superbly qualified man to take that position. But yeah, I mean, with the betting market so overwhelming, anyone but Powell at this point would be a big surprise to the market.
What if it's Yellen?
I think Yellen would be fine. I mean, I think the market likes Yellen. I think they'd be surprised, that Trump would keep a liberal Democrat in, but I think she's done an excellent job. Actually, she would be my first choice if I were president to continue with her. Although, I think that Powell is also qualified. I only wish that he had more deeper training in monetary theory and policy. But on regulation and on financial markets, he certainly had a lot of exposure.
Yeah, okay, the Federal Reserve on Wednesday, some people may be watching this on Wednesday, we're recording this on Tuesday, may decide to raise rates again. They may talk about inflation. If there's some indication that inflation is going up faster than they think and that maybe rate hikes will be more rapid or more aggressive than we think right now, is that a risk to the market? Or is the economy strong enough and the global reflation strong enough that even more interest rate hikes are not going to doom this pretty amazing rally?
Yeah, the core year-over-year PCE deflator, which is the Fed's measure of inflation, is running well below 2%. Now, we've seen oil has been coming up. Certainly, gasoline is up, so some of those sensitive prices are up. I think the statement of the Fed, are people still concerned that we're not reaching that target, which might mean a little more opposition in December to that rate increase, although the market now gives that nearly another slam dunk. Just about the same probability Powell being chosen is the probability that December we're going to get a 25 basis point hike. And I think the market is certainly used to that idea. So that's not going to be a shock. I very much doubt that this November statement is going to put the market on notice for a more aggressive stance in 2018. So I think really the Fed statement is most likely to be a non-event, especially with these huge announcements on taxes and Fed chief coming up right behind it.
True or false? A past, not a pitched, but a past tax reform bill is already built into the Dow Industrial Average price?
Not all of it.
False-ish?
And I mean, and don't forget, we got to see what the package is, and how much is business taxes, whether there's opposition, they have razor-thin margins, whether it's phase-in or not. There's still a lot of parameters, so it's not a yes or no. But if there's a lot of business tax cuts, and I think half of it is going to be corporate taxes, and if it looks like they've got those Republicans on board, I think we've got another push in the stock market. If there's a lot of opposition and looks like it'll fail, we're going to see a setback. Not of huge proportions, but certainly I don't think it would drive further. Certainly on the heels of a tax cut that looks like it's not going to be enacted.
Professor Jeremy Siegel, the Wharton School, always a pleasure. Jeremy, I look forward to chatting with you again, and we are certainly watching this remaining huge week on CNBC. Thanks, Jeremy.
Thank you very much, Brian.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.